Normally, when you see a pink-green top, you see it dropping, or let me say, the conditions for a pink-green top are with zip green going up. Now, keep in mind what you're looking at when you're looking at a pink-green top. You're looking at zip green, which is the buyers in and out of the market, or you could say the trades that are made that are going or that are coming into the market, because zip green is at 100. When zip green is at 0, people are leaving the stock. And obviously when zip Zion, the grandfather, is at 0, there is a lot of people leaving the stock. Or if it's at 100, there are a lot of people entering the stock. It's real hard for zip Zion to remain at 100 or at 0 for a long time. If it does, you've got a huge market movement taking place. And oftentimes if it runs 3, 4, 5 days at 0, it'll pop up, and then it may not come back down to 0, but the value or the price of the stock continues to remain flat, if not go down. So this video that I've got is a video on pink-green tops, and I have three examples actually. The first one is normal, that's the red vertical line, and the other two have zip green at 100, but zip pink has dropped down below. And I'll just point out here, in the red vertical line, zip green was at 100 for 2 days, and the rule for a zip green before it can drop is that the pink vertical line must be up next to green, and it must be going up. That's the basic rule for the zip green top. You do not see what I'm sharing with you here in the green vertical line and the pink vertical line. You don't see that too often. And basically what it amounts to when you see it is you're in basically in a stronger uptrend. And as you know, the pink-green top is a reversal pattern telling us that prices are going to go down. Okay, now what we've got here on the green vertical line day is a day when not only the zip pink went down, but also the gray, red, yellow, and blue lines have gone down. And the red, of course, is down at 63. So red has taken a significant drop. And when it does that, it usually indicates that the next day is going to be not going to be up when it takes a huge drop like that. But again, if it would be closer to the 50, like within 4 or 5 points of the 50 line, then we would probably or could make the assumption, at least on with just looking at the zip red line, that it might reverse back up. In this case here, the green vertical line is a little red doji candle, and the next day is a little green doji candle, so there wasn't much movement in what has happened. And obviously on the next day after the green dropped down, we then have a red spike with red down below the 50. It's crossed under the 50, and the yellow is up high, and zip yellow in this case is at 84. We also have zip yellow in a low angle, either up or down, I didn't check, but when it's in a low angle, that usually means it's up the next day. And zip yellow, zip blue, zip pink, even swing Zion, and I'm not sure about that one, but over on the other ones we have zip. If we move the green line over to that day, like the other one is, we then have the power red, and if we check the others, we can see that almost all of them are in a low angle movement right there. And 2 days after this vertical green line, we have a gap up, go up, pretty nice one. Looks like it went from, on this day here, the day before the gap, the close was at $21.30, and it ended the day at $23.77. So it went up several dollars on that gap up day. Now, what I want to emphasize to you is that I'm going to move this green vertical line back to the day of when was the last day of the green top at 100, the pink green top at 100. On the green vertical line, we had the pink drop down. That is not normal. We normally would want the price to go down, expect the price to go down, but because it dropped down, then we can logically conclude that it may go down the next day or it may go back up. We would just have to look at the evidence. And so we wait for the next day, and I can assure you that throughout that day, with that little doji candle up there, with that little price movement, that all of these lines remained pretty flat. And that would tell you that the following day it's probably going to go up. So it would have been a fairly easy judgment call once the market opened, and you could identify with that. Now, that's one example because what was happening, we were sitting here on this day right here with the green candle out there let me move these back here, with the green vertical candle right now is on a high with ZipPink highest. That's the normal condition that is required for when the signal is that it's going to go down. Let me rephrase that. Generally speaking, a vast 90+% of the time, Zip Green will have Zip Green at 100 and Zip Pink will be next to green going up. That condition exists over 90% of the time as the signal for that pattern to drop. That does not mean that it's going to drop on that day, because you can get several days with Zip Pink climbing up before it drops down. But 90% of the time or more, Zip Green is at 100 with Zip Pink right next to it going up. Now, one thing, the signals that you see are over here, like on the pink line. Normally, Zip Pink would continue up, but in this case it has gone down. But imagine for a second that Zip Pink continued straight over and the Zip Zion came up to 100, and it did so in a bottlenose pattern. And so what we have then is a Zip Zion coming up to 100 in a bottlenose pattern, which is normally a reversal back down. And I don't know when I want to say I want to say the vast majority of the time when Zip Zion hits a 100, it goes back down the next day. But it's a high percentage of the time, because it's real hard for the Zip Zion, which is the grandfather to Zip Green, just to maintain being at 100. It just takes a lot of power. A lot of people have to continually enter the market if Zip Zion is going to remain at 100. So, and especially when you see like a Zip Red dropping, Zip Red right there is at 62 on the pink vertical line. And so when it's dropping that far, the general reaction is normally going to be, well, it's going to continue going down. All right. But that has not happened in this case. and I want you to see why. Again, think about what we're in. We're in the pattern of a pink-green top. The rule is that the pink-green continues going up. When the pink-green does not go up, that's the start of a downtrend. But look at what's happened to the candle on the pink vertical line day. It gapped way down, causing the zip pink to go way down, but then by the end of the day it's way back up. It went up above the previous close of yesterday, and then it settled in just under the previous close. But zip pink still remained down like all the others: red, gray, blue, and green. Red, gray, blue, and yellow, I mean. And so when you see this happen, and now what's happened? Green is still at 100. And not only that, Zip Zion has now come up to 100. So what do we think? How are we going to trade this movement the next day? One of the key things is in your price chart. When you have, we all know that as we go into an uptrend, red and green go far above blue, and most of the time they're 90 to 100 points above the blue line when you're going into a nice uptrend, or even if you get a spike up. And we also know that green and red top out right next to 150. They very seldom go over 150. There's a lot of times they turn around in the mid-high 140s, even the low 140s, even the 130s. But when you get a long extended uptrend like this, if we go and look at this high right here, green is at 146.08. So it's reaching the top. It goes down. What I was alluding to here before, when red and green go down and they stay above a certain number, like they're real high. In this case here, red is at price red is at 128 and green is at 142. Sometimes red will drop 30-40 points below green, and we look at the green line. When the green line drops and goes down even to around 90 or 100 points, the majority of time it'll bounce back up. And so when we see a movement like this where green has come down to 142, there is a real good chance that it's going to go up the next day. But what happens? After the pink vertical line, you're thinking, well, it's going to go up. What happens to it? It gaps way down. I mean, it closed on the pink vertical line day at $29.93, and it opened at $28 even. So it gapped down, 7 cents short of $2. Then it went down. Like I say, it opened at $28. The low was $26.83. So it drops another $1.17. So that's a pretty significant down push. And I can assure you that when that thing gapped down $2, everything was pointing down. All your lines at that point were pointing down, and they continued to do that until this thing rose significantly. And then as a result, when we're looking at this day right here with the pink green line on the last day of the let's say the peak, because that ultimately is the peak. We see these BOC patterns on the peak in the price green and red patterns a fair amount of time. I mean, when we see them, they usually go down. That's not always true, because you have to watch the zip yellow line and make sure it does drop. Also, please note that your swing gray is actually at a cycle top. We don't know that yet because we haven't seen tomorrow if we're just thinking on the pink vertical line. But ultimately, you can judge your cycle top. The next day you see that drop down, some would that are swing traders would just say, I'm going to get into that trade, and they would wait for it to go down significantly. But obviously it only goes down a couple $3 in 10, 12 days here, so that's not my style of trading. But for some, they like to swing trade rather than day trade. Now, that being said, when you have a back to this last day, ZipPink, instead of staying high with Zip Green at 100, it dropped. And so that in itself is telling you that that's not normal. Why did green stay at 100 and pink dropped? Well, even though green continues to drop the following day, I mean, everybody just think about what happens here on the following day. This would be this day right here, the day after green leaves 100. I'm going to move it back so you can see. On right here, green on the Zip Pink line, green is at 100. The next day, Zip Green ends up at 48. I mean, it's dropped 52 points. Okay, now what caused that to happen? A significant element of it was in the gap down of the $2, and then it went down another dollar in some sense. Everybody was selling out. And so that drove the value down, that drove our indicator values down, but then by the end of the day, they started buying it back up again. And hence you get this peak right here, this bottom of cycle peak in the Zip Green pattern, but you have one key thing that goes with it, and let me point that out. Price green right now is at 146.08, and on the day of the pink vertical line, price green is 146.22. So price green is a higher BOC pattern. The red on 2 days before the pink vertical line, price red is at 135.62, and on the pink vertical line it's at 134.36. So it has gone down. So now you've got a BOC lower and a BOC higher in your price green vertical lines, which again we all know is a case of divergence, which when we find divergence, we also potentially find significant volatility. And if you look at your situation on this day, if you go into the trend chart, you got trend green going down, trend red going up. You also have, look closely here, you also have trend gray in a BOC higher pattern just above the pink line. So it's basically up touching above the pink line. The red is up touching above the pink line, and they're obviously not under, but again, if you've heard me talk, you close counts, in hand grenades, horseshoes, and indicators. And so it counts as a up touch, which then says this thing is going to go down. We have the same type of BOC patterns in power yellow and power pink, blue, red, white, and Zion. I mean, the whole thing is just loaded full of that stuff, loaded full of those BOC patterns on a peak, which tells us the next day it's going to go down. So you can read these things fairly easily. You just need to think them through. You need to think about what what Zip Green is about versus Zip Pink, because you are tracking buyers entering or leaving the market. At 100, they're entering the market. Or let me say this. I say you're tracking the buyers. You can obviously, you're tracking the trades. There could be a small group of people just continually buying the stock, but I say it as buyers coming into the market. Now, that being said, when you're basically looking at the difference between what price is doing versus the trades that are being made in the stock. And that's why the pink green top and the pink green bottom patterns are so powerful, because they compare two really potentially opposite values of what's happening in the stock, and you can see that relationship. And so one should be going up and one should be going down, potentially, but depending on how you're looking at it, I guess. But in any case, that's an example of what you normally do not see in a pink-green top. You normally do not see the Zip Pink go down when green stays at 100, and as a result, in both cases, the uptrend continued. It was, they just went down to a doji candle the following day, but the next day they were back up. So keep that in mind when you see something like that. Treat it as possibly going into an uptrend, but keep in mind where your issues are in its relationship, and by that I mean, let me turn back and show you the classic condition that I'm talking about. In your green vertical line right here within your trend chart, a couple of days later, trend red is in a down touch. We all know down touches reverse the price back up. Red down touches, then gray is underneath the blue, so it's in the pink area, but the following day, right on this day, the day before the gap up, gray now down touches pink. And you've got all of these indicators, like if I move this green vertical line over to here, and I move this green vertical line over to here, then you can see that we've got a lot of low angles down, which tell us that the price is going to go up. And so we've got down touches on the green vertical line, and we've got up touches on the pink line, and they're also up touching the trend trio pink line. In the green vertical line, they're down touching the pink. So what do you see on the pink vertical line? The up touch says we see a down day next day. On the green vertical line, we see a down touch, and that tells us it's going up the next day or 2 days or whatever. So it's not rocket science, but you do need to look at the evidence. I just am amazed sometimes at how flippantly we can treat technical analysis, and it's got that name for a reason. And if you'll go with it, it'll tell you wonderful things about market movement. But you have to look at it. You have to look at all of them and recognize what it'll do. So I've said it before, I'm amazed at this system, and I will repeat myself again when I tell you to have fun trading. It's just a wonderful opportunity to make some spare money, Or if you're serious like we are, you can make some serious money, especially with a system like this.